In order to grow a successful business, it's highly likely that you're going to require some level of funding. Before you start on the fundraising journey, it's important that you understand your financial position, your financial performance, and your funding needs. In order to do this, make sure that your management accounts are up to date, your financial accounts or audited accounts are completed, and you're up to date with your revenue and CRO updates. The first step is to build a financial model. This will, of course, reflect the actions outlined in your business plan. A financial model should incorporate sales forecasts or projections and the costs associated with building your business. They will include things such as sales projections, profit and loss account, cash flow, and balance sheet statement. It's important to realise that you need to build a buffer into your projections. For example, we know that sales take longer than we anticipate. Also, that we're going to spend more money than we forecast we would do. The use of funds is also something that you need to look at. You need to be very clear in terms of understanding what do you need the money for. Do you need it, for example, to build a sales and marketing team? Do you need to complete product development? Or do you need to build a back office in terms of customer support? The second step, once you've identified the level of funding that you require, the second step is to look at the sources of fundings. Typically, companies would look to either debt or equity funding. Debt is perhaps typically a bank finance or a loan and requires to be paid off. Equity is where an investor will take a proportion of your company or a shareholding in return for an investment. Sources of funding at startup typically would include friends and family. There are also organisations such as business angels, which are active and will assist in funding startup companies. You may also get support from organisations such as County Enterprise Boards and Enterprise Ireland, which offer a range of supports, including funding for companies. In addition to these, there are a number of venture capital funds which will support start-up companies which are scalable and knowledge-based organisations. Some of these funds would include, for example, the ARBC Capital Fund.